In the fourth session of the 11th Biennial Corporate Governance Conference held by the Hong Kong Institute of Chartered Secretaries, the speakers were asked to give their views on the new skills and mindsets needed to cope with the fast-changing corporate world. The first speaker, Ms. Cindy Chow, Executive Director of Alibaba Hong Kong Entrepreneurs Fund, explores ideas that may be especially relevant to younger corporate governance practitioners in the years ahead.
I am Cindy Chow from Alibaba, and I am running the Alibaba Entrepreneurs Fund. So in the next 15-20 minutes, I'm going to share with you what our fund is doing and why we believe that it is important for business leaders like yourselves to embrace the new technology and the new era for in technology. Okay, so emerging technology, first of all, mobile. I think most of you would rather leave your wallet at home than your mobile phone at home nowadays. So mobile technology has really changed our life. Just take a step back. For example, payments and also the Uber, Didi, ride-hailing services. Without the mobile technology, I don't think these products will be available. And these products actually have, really provided a lot of convenience to our life. And then robotics is not only to be used in traditional production or manufacturing environments. So this company on the left-hand side is called Zumi. It is a startup in Silicon Valley. It has transformed a pizza delivery service by using robotics. So they have trucks where there are robots cooking the pizza while they are, on their way to deliver the pizza to their clients. And recently they got an investment from SoftBank, and it was rumored, they did not disclose it, it was rumored they got up to $500 million investment from SoftBank, so you can imagine how much they value. And of course, blockchain. So documents and information can now be more securely transferred from one another. So I guess very soon, all of you may not need to do any certified true copies for your clients. And then AI, we talk a lot about AI nowadays, how AI can help us to improve efficiency and how to make decisions for us. So in addition to the case on the bottom whereby the BBC reporter was identified within 7 minutes in law enforcement, I think AI can really help us to work more efficiently. And indeed, there's a survey or a research by PwC, and they forecast that by 2030, the total GDP of the world will increase by 16 trillion US dollars, which is contributed by the efficiency helped by AI, and also the consumption that we increase because some of the capacity has been released from this increase in efficiency. So some people will say, will AI take up all our work? So in a separate survey, also by PwC, they surveyed 500 executives around the world. So most of the executives believe that AI won't replace our work. However, 67% of these executives believe that human beings or workforce will likely to work with machines with the help of AI. So AI will definitely going to change how we work and how organization is being structured. And also, of course, technologies like 3D printing, AR, VR, and also IoT will definitely change the way we work and also how we live. So in that background, or with these all new technologies and all the products and services that we can gain from these technologies, we believe that as leaders, business leaders, there's one thing that we cannot wait is we have to embrace this change and see how we can better equip ourselves in order to really come into this new era. And one of the key things we believe is very important is to look at the type of talents that can work in this new era. And we believe that we need people who are more creative, more collaborative, and with critical thinking, and also with the entrepreneurship mindset. And I want to highlight one point is collaboration. When we say, for example, AI, for AI, we need to collect a lot of data, right, from different departments. So if the data is good, then you want as much data as possible to help you to do the decisions. So for an organization structures, you can not only be working within your own department, because you have to facilitate the data or the information flow between departments. So your staff has to be, really collaborative with each other, be able to share with each other the information in order for the machines to be able to make a good decision or prediction for you. These kind of qualities of mindset will be very important for the growth or for the development of the business. And the other thing that we very much, aspire to, especially in Alibaba, is the entrepreneurial spirit. And here, we don't talk about just, starting up your own startup or doing something new. It is the mindset of being able to get out of your comfort zone, really thinking out of the box, and be able to have the ownership. And this is always being evaluated. Actually, every 6 months we have an evaluation, and this is one of the things that we will be evaluated. So I keep telling that in Alibaba we are always given very little resources, but being asked to do a lot of things. Maybe it is kind of the way that boss don't give us the headcount, but then say you have to have your entrepreneurial spirit and get out of think out of the box and then try to achieve whatever goal they set up. And this is with this background that the group set up a fund, the Alibaba Entrepreneurs Fund, in late 2015. And Jack Ma wants to really help Hong Kong, especially the younger generation, to instill the entrepreneurial spirit, the creativity and adaptability mindset in order to help Hong Kong to be vibrant and also to embrace the new challenges ahead. In our fund, there are 3 key things that we've done. One is we invest into startups. The second, we support innovation. The third is we nurture talent. So I will touch on each of them briefly. And for this fund, we allocated 1 billion Hong Kong dollars from the group and invest into startups with a Hong Kong nexus. When I say Hong Kong nexus, it means company that are established in Hong Kong by Hong Kong people or by talents from outside, or from founders who reside outside of Hong Kong, but they are originally from Hong Kong. We run this fund very much like any VC firm, so we are very selective. We invested into about 1% to 2% of all the proposals that we have reviewed. But we are not for profits initiative in the sense that we look at our bottom line, but if there is any return, we'll plow it back to the fund, so hopefully it can stay evergreen or grow bigger. Besides investment, we also use our resources within our ecosystem to help these startups to grow, be it business collaboration or expansion into other countries or areas like to the mainland or in other areas that we have business. So I just want to share with you some case studies in our investments and to hopefully to give you some insights on how we look at innovation. So GoGoVan, I'm sure that most of you must have heard about GoGoVan. It is a homegrown logistics company. They were not actually doing logistics. They were trying to deliver lunch boxes at that time. And they found it very hard to hail a van to help them to do the delivery. And therefore, they come up with the idea of having GoGoVan. And now they, besides serving consumers like ourselves, a large part of their business is actually helping enterprises to help them manage their logistics fleets. GoGoVan also recently merged with one of our subsidiaries in China, which now becomes one of the first unicorn in Hong Kong. This actually shows that when there is a problem, there's an opportunity. And very often, this kind of a problem can be solved by outsourcing to these startups. So I guess some of you with big corporations, when you have problems, maybe you can also thought about looking into the startup field to find someone who can help you. And then the second one is WeLab. If you look at the news, you'll know that they just recently filed for a IPO in Hong Kong on the main board. So WeLab is basically a small loan service provider. How they do the credit rating for individual consumer like myself, the algorithm is based on your social network, your phone contacts, and to calculate the risk level, which is something, really can't be done without the mobile technology and without all the social network that we are, so addicted to nowadays. And then Yichu, this is a very interesting case, especially I see a lot of ladies here. So this is a rental platform for clothing platform. So they started off from renting occasion dresses like cocktail dresses and also evening gowns. And the reason why we invest into this, a lot of people ask me why it's not something new, right? When we were young, when we had a wedding, we go to Mong Kok, Gam Do Sanchang, and then we rent our wedding gown and so on. But then I said, well, this is a different age now. 1/3 of our population around the world are millennials. And then millennials are quite different from our generation. Whenever they go out, they will first of all take a picture, right, with their friends and post it on Instagram, Facebook, WeChat. So they cannot, wear the same dress again, even they are not meeting the same group of people, because all your friends will be seeing that, okay, Friday you are wearing this dress, and then Saturday I cannot wear this even if I'm not meeting the same group of people. So the demand is different because the mindset is different. And then the millennials, we find that they are more, passionate about doing good to the environment or to the community. So they are more into the sharing economy. And we also see similar product or service in the US called Rent the Runway, which is very successful. So that's why we believe that there is a case that we can be Yichu can be successful in Hong Kong as well. And recently they also extended into what they call an infinity rental service, which they are renting everyday wear, which you can pay on a monthly subscription. The other case is called Cubital. Cubital means quick capital. So these two young gentlemen, they actually worked in banking before. And they found out that it is very hard for SME to get financing on their AR. So sometimes the accounts receivable may take you 30 or 60 days in order to settle. But for SME, it is very expensive or very hard for them to get any factoring service from major banks. So they see this opportunity or this problem. And that's why they provide this service to the SMEs and then the funders are funds or family offices to bridge the SME loans to help the SMEs to solve this financing problem. And there is one thing that it is that they have not expected is that because of the e-commerce trading, actually a lot of SMEs, they have to, really stock up, especially before like Double 11. But these SMEs, they were really hard to get loans. But then platform like Alibaba, we will be able to tell how much these merchants are selling and how much stock they are stocking up in our warehouse. So these can serve a very good information for them to extend the credit to these companies, which I think traditional banks may not be able to use this kind of data to substantiate their loans. So you may ask me, after running this fund for 2 or 3 years, what I see in the entrepreneurship or the startup community in Hong Kong. So I guess it is getting more robust and getting more people to get involved or support, be it the government or corporate sector. And in a recent survey that we did together with KPMG, we found that most of the students or the entrepreneurs that we surveyed found that Hong Kong is still a very good place for them to do a startup. Indeed, it is just behind the Big Bay Area and also Singapore, and they rank it the 3rd. But the key thing here I want to point out, and also to really urge you guys to help to support, is the support from parents or the family. So among those that are being surveyed for students, they found that only 28% of the students believe that if they say that mom and dad, I'm not going to be a doctor, I'm going to have my own startup, only less than 1/3 of the parents will support them. And then if we look at the entrepreneurs, so those who are already doing their startup, so only 18% told us that their parents or their friends support them when they say they are going to do a startup. So I guess it's really something that the whole community in Hong Kong, or be it corporates or be it family and friends, we have really to change a bit of our mindset, give your child or your friend's child a little bit more support when they say, I'm going out, not the traditional way, but doing my own thing or joining a startup. So I guess without this the support from the society, it would be very hard for us to really grow this ecosystem. And therefore, our fund has also been supporting other events or other initiatives in order to cultivate the public involvement, especially the corporate involvement in this startup ecosystem. And one of the key events is called Jumpstarter, which is a pitch event which we have involved a lot of corporate support in it. And very happy to say that one of the winners that came out from the competition, CLP, was also the investor. And it is very important that corporates like yourselves be able to support it, because startups need people to use their product and their service. Otherwise, they cannot grow, not to talk about being a unicorn or even to get IPO and so on. So I guess your support, be it from a personal side or be it from a corporate side, would be very important. And very briefly, we talk about people's mindset or young people's mindset. So we also have Internship Program, which is a 6-month program that we support the students to work in Alibaba for 6 months, which is quite unique in Hong Kong's situation, because it will disrupt their studies. But we believe that this can really give them a real taste of working and living in China. And we also support younger generations, high school students in pitching events, in joining some boot camps organized by different organizations, and to help them to really cultivate a bit or sow the seed of innovation, be creative, and a new mindset that they may not be able to get from the very traditional education system in Hong Kong. So I hope that you all guys help to join us to create a more creative, agile society, and help to Hong Kong to keep the Hong Kong vibrant and also prosperous. Thank you.
The next speaker, Mrs. Ann Kung, Deputy Chief Executive of Bank of China, Hong Kong Limited, further explores developments in the banking sector and how banking can lead change in the corporate world.
Now, why have we bankers not made the cut when it comes to the popularity chart? I think one simple reason may be that we are in a highly regulated industry. We know more about why we can't do certain things rather than we know why we can do them. And we stress more about corporate governance than most industry, I think, probably. So maybe that's why we have not been known to be particularly innovative or creative. We are obsessed with compliance, starting from the top to the execution at the tellers or the most junior person's level, because we are all personally liable. Right? Some may say that we are eager to chase numbers, and of course we are, because we owe it to the shareholders. But then when it comes head-to-head between the two comms, compliance, compensation, compliance always wins out, because you can ask any of our frontline people, it's a lot more painful when you're non-compliant than when you're not meeting your numbers. Now, Those who are interested can refer to the latest version of the module CG1 in the Supervisory Policy Manual from HKMA, which describes clearly the standards of corporate governance that the Board of Directors and senior management would have to maintain in order to satisfy the minimum criteria for authorization in the banking ordinance. I'd just like to point out that the banking practices have continued to attract more prescriptive guidelines in the past decade. This is driven by AML and also from the lesson learned from the Lehman incident, which happened exactly 10 years ago by tomorrow. Now, from a citizen's perspective, strong focus on corporate governance and risk management is welcomed because we know that we are heavily invested into safeguarding our banking system's stability, which is of utmost importance to Hong Kong, and also that banks are entrusted with public's money, and we are well regulated. As a customer, however, I'm not so sure if you're equally happy when the bank's due diligence process, or KYCs, ask you to provide loads of document proofs and participate in recordings to help us with our compliance requirement. Now, we heard a lot of horror stories. So the industry, HKMA, and stakeholders have been working hard to find the right balance. Last year, I had conducted a good number of talks in this area addressing financial inclusion, risk management, to address this issue. In those sessions, I had also said that looking into the future, we're hopeful that we'll have smarter solutions to help us with that through fintech companies. Particularly working with the government to connect the fintech companies and other solutions providers into the financial ecosystem was one of the recommendations given. Now, under the guidance of HKMA and the active participation from the industry and stakeholders, that future seemed to be arriving rather quickly. After 13 licenses for the store value facilities were granted in 2016, the HKMA announced the 7 new initiatives in September 2017. And a year from then, we are already seeing a lot of progress in this new horizon. Now, this wasn't just a list of things to do. Many of us who are in banking now are undergoing the biggest challenges in mindset changes and skill set requirements. The digital economy and its ability to understand what and when and where the customer's needs are with the use of data is something that is way ahead of how banks are doing it today and how we define as being customer-centric. And the management processes and the decision-making mechanisms to design the customer journey, the customer experience, the user experience, and the user interface is just not something that we're equipped with. So banks' needs for transformation is glaring at us. Now, on the other hand, while many of the payment and remittance solutions are being offered by the SVF license now, customers told us that the old habits and confidence have continued to be a barrier if they were to pick up new technologies to handle their payments and finances. So tech firms, which aspire to join into the financial system, must also be able to build strong level of public trust and be subject to regulations through the same risk-based regulatory supervisory regime. Now, in this new era of smart banking, banks and tech firms seems to be walking down the aisle together. Different sorts of collaboration are already happening. 29 applications for virtual bank have been received at the end of August, according to HKMA. Now, virtual bank licenses is not a backdoor to a banking license. It is a level playing field. They too are subject to the same robust corporate governance, and also they need to be well capitalized. The difference is only on the mode of delivery, and it has obviously attracted those firms who already have strong technology on payment and other financial capabilities. Banks, whether they are venturing into building a virtual arm or not, are investing into their digital platform as the faster payment system goes live soon, and the open API framework is already coming along with dates already mapped out. Banks can also take advantage of the various innovations in the market to enable them to be more efficient on customer onboarding processes and transactions services. For regular citizens, you probably would not feel the impact yet because many of the development is still in the kitchen. We're very busy in the kitchen, but the food isn't cooked yet. But you might be able to smell it. Hope it smells good. One of the businesses that is obviously ahead of the game is probably the search firms. The banks are seeing that their talents in finance, accounting, risk management, in all these areas that were probably not the most popular area, they're being recruited by tech firms. Because the tech firms have to learn from the banks when they go into more on the financial provision, how to deal with the regulators. And the banks are seeking UX, UI designers and scrum masters from the digital players. Regulators, however, are never too far away. The enhanced competency framework for banking practitioner, which currently covers 6 professional streams, would serve to ensure that the set of common and transparent competency standards can be adopted for benchmarking, whichever industry you're from. Now, in closing, there's been and continue to be a high degree of convergence between banks and tech firms in the provision of financial services to individuals and corporates. And that would be for local adaptation across the border and also for international reach. I share HAMA's views, and I quote, that banks in Hong Kong are offering safe and efficient banking services to customers through conventional branches, digital, and internet banking. And that conditions now exist for banking in Hong Kong to rise to the next higher level. This is not easy, but it is indeed exciting. Running in parallel with the continuous strengthening of corporate governance, financial stability will be well looked after while the industry goes into the new era of smart banking. It will no doubt make banking interesting again, and it will make Hong Kong an IFC as well as a technology hub in Asia.